A warm welcome to everyone, and thank you very much for joining this webinar on using knowledge graphs to harness the potential of patent data. In terms of the format today, the webinar is being recorded. Feel free to send questions at any time into the chat, and we'll also do our best to answer them as we go along, but you can answer questions at the end, so feel free to save questions to that point if you prefer. I'm delighted to be here today with Tony, who's going to share some research he's conducted. This is the third webinar in our series on concept exposure data. The previous two webinars used news as a primary data set, and here we're going to examine Tony's latest research into patent data. For those of you who are not familiar with Yewno, we're an AI company, and our technology transforms huge amounts of fundamental and alternative data into actionable insights. Our financial solutions include data packages, index strategies, and a web-based financial research platform. But before we start, I'm delighted to introduce Tony, who's a portfolio manager and executive director at RAM Active Investments in Geneva, Switzerland. He works together with RAM's team of equity portfolio managers to develop systematic investment strategies. Tony's work is focused primarily on extracting market inefficiencies from different sources, from traditional fundamentals, market signals, alternative data, and machine learning, and his expertise is in mid to low frequency inequities. So Tony, it's great to have you here, and thank you very much for joining us today.
Hello, hi everybody.
What I'd like to do first as an introduction is, if I may, could I ask you to recap the previous webinar looking at Yewno's concept exposure on news? And if it would be okay, could you tell us a little bit about what we can expect from patents using the same multi-factor model, but a totally different data source?
Yeah, sure. Thanks again for having me, and to everybody who is listening. We really hope that you are well and safe at this very strange moment. Well, regarding the previous webinars that we did, you can see the slide which is recapping some of the results. The idea behind the first webinar were to harvest what can be used out of the concepts. So concept is something that is derived from graph knowledge, and you are producing those signals. But the idea behind it is to test on firstly on a standalone basis concepts that are related to financial literature, financial ontology, financial glossary, some financial taxonomy. Things like earnings, dividend yield. If we use them as a concept, extracting just the exposure of a typical universe, can we use that as a signal in order to construct portfolio? And we show that above the only standalone concept implementation that proved to be working, and you saw some of the extracts in these slides, we also give another flair using multiple concepts. So again, taking the old taxonomies of financial literature regarding earnings, estimates, cash flows, but this time using them through the concept exposure, rather to use them as NLP topic or just as plain vanilla measuring the metrics. And it proved to be extremely interesting to use nonlinear techniques such as machine learning to construct portfolio made of those concepts. Well, now that's the things which is really interesting is what we are discussing today is to take this protocol that we use in previous webinars in order to harvest a new type of documents. And as explained, again, all those signals which I'm referring to, which are concepts, that coming from the same technology behind it, which is a graph knowledge. And graph knowledge, according to me, I'm nobody to say that, but I've been doing quant research for the last 15 years, kind of successfully so far. And amongst the three excitement in terms of research that I have, graph knowledge is definitely one of them. The other two topics are machine learning and genetic algos. But really, the thing which is extremely important, but this is something that you have to bear in mind in any type of research, is to come up with expectation. And the thing which is interesting on patent data is that the expectations are very different from the news. If we go through some of the points that I explained in these slides, patent activities as it is now have been, for me, following the same path as news or sentiment in the early days. I'm going to explain myself. At the moment, you can find out a lot of different patents signals coming from third parties. You can also do it yourself, for instance, because I don't know if you were aware of that, patents data are public by essence. And that's why you can find out a lot of different information publicly. We're going to show that potentially in some of the analysis that I've done. But what is really interesting in graph knowledge / patents concept is that it goes beyond the plain vanilla approach, which is the current one, of counting things. Okay, you count the number of patents. If a company is producing 10% more patent than 3 years before, you expect this company to outperform. This is counting things. Think about it as the difference between counting words when you're doing NLP and the embeddings approach, right? And that's exactly the same thing. That's the metaphor I like to say when we're dealing with patent data, the classic ones, the generic one, which is, don't get me wrong, better than nothing, and the things that we're going to discuss today, which are based out of a graph knowledge. So amongst the things that we expect is to go beyond the simple approach, to have something which is better than that. On top of that, we want to capture this existing cluster of innovation. So when you're working with concepts, the beauty of that is that you can think about a theme and literally go down the layer of this graph, these networks, in order to see what are the sub-themes. For instance, in some of the exercises that I've done, I was focusing on quantum cryptography, quantum dot methodology, quantum computing. And that's the idea, to use vectors, a cluster of innovation, which is coming through this graph knowledge. And it's very easy to use it as a concept definition. The third point that I mentioned also is which is really interesting, is to early integrate progressively when you're doing this ideas of using multiple concepts, like different degrees in terms of the concept of specification, from a very general, which is quantum, to something which is a methodology. And the idea of that is to detect early long-term technological trends. So that's extremely important in the patent landscape, to have a methodology which is enabling you, if you want to construct portfolio, to be exposed in your investments toward those innovations that progressively and automatically could be included. And this is, again, very easy to use that more at the concepts level rather than just counting things. And basically, the idea behind that, and that's also main difference when you compare news data compared to patent data, is the duration of the portfolio that you can construct. Obviously, when you're dealing with patent exposure, you don't have patents for a company every day, which is released, right? So there is a duration which is longer. So naturally, you want to construct longer term things, which the perfect vehicle at the moment is a thematic ETF. So that's, for me, the main differences between news and, to some extent, the recap where we were with the webinars on news and when we are today with a case study on patents.
Thanks very much, Tony. That was a fantastic recap. And I think it's given us a good sense of what we can expect today in terms of looking for concept-based signals on patent. Before we go into the next bit, could I ask you to talk a little bit about the patent data landscape?
Sure. That's a great question. Actually, that was a very fun exercise for me, because I did a little bit of research on patent data a long time ago, and I had to do some kind of brushing up what has been done lately in patents. So getting back potentially on the slides, if we can move on to the next one. First, I wanted to show something which is a patent data 101. What is a patent? What can you expect from patent? So patents used to be a very boring things, to be honest, which were much more harvested by lawyers, because when you have patents, you can have infringements to a patent, which led to trials and things like that. So very fortunately for us, I would say the financial community, lots of the added value, the alpha and information, the signal have been left in those patents, because for decades they have been used mainly through another profession. It was not linked to investment. So a patent, as you can see, is something that could be found very easily nowadays. This is an extract for Google patents, when you can literally type a concept or something like that, like quantum computing, and see the latest patents, the dispersion of the patent. What is also interesting at the right end of the slide, you can see the company that have been active in this, to some extent, concept, which is quantum computing. But maybe if we can move on to the next slides, what is in the patents? That's also something that people should be interested in, because I was referring to the big difference of patent signals coming from graph knowledge compared to patent signals on counting things. So I would refer that as patent activities. Right? So this is counting words, counting things, the number of patents. Criteria that have been used also by people in the literature is to count multiple countries' patent filing in order to see that there is something behind it. And you get an example here of an abstract of the patent, which is following again this example on quantum computing. And what has been very interesting is that this is again a stuff that you can find in Google easily. You can see that there is an effort on the bottom side of the slide of showing some of the concepts. So this is coming from Google. This is not coming from Yewno, and you see that some of the words that have been used. Maybe the slide is very small and you cannot see the words, but some of the words that have been extracted automatically by this like very first layer of Google public patent are not making any sense. They're absolutely not usable. They're either super technical or they're just too general. So even if you wanted like to do the exercise of counting topics within a patent, that would be, according to me, inferior to using graph knowledge, which is much more a semantic cross representation of the knowledge. So maybe another example, if we go forward, yes, that's the idea of what I wanted to show you. If those concepts, for instance, you see the fourth word is layers. So everybody's happy to know that there is layers that is being counted 65 times. It's not making your life easier. You're not going to see some of those things. So again, be careful if you wanted to do something from scratch. This is a super interesting exercise. But again, I would say that according to me, it's already difficult to try to mimic this approach of carving out concepts from patents yourself.
Tony, that's great background. Before we get into further details, you mentioned that you've done a bit of background research on the patent data potential. Could you tell us a little bit about what you've found so far?
Yeah, that was very interesting. Again, thank you for making me do this research. To some extent, it was a very interesting thing. Again, I saw a lot of similarity in quantitative research in patents from the early days of NLP sentiment. As you can see, this is an extract for FactSet, which is, I was saying, I'm not saying it's bad, I'm just telling that this is good to have that compared to nothing, but you can, in terms of the technology behind it, simple counting, which is counting in motion, the number of grains or the recency, it's nice, but that's just a first step. According to me and the test that I've done, and if you follow a little bit the NLP quant research literature, you saw progressively that including embeddings, including multi-corpus, extracting the idea of a concept and the clusterization of a concept through different patterns is very interesting. So I'd say that the first layer of research that I saw is this on these patent activities. Regarding now some of the papers that have been written, which are in following slides, on slide 10, I put some lists of very interesting paper. If you want to have an idea of how the asset pricing literature, also the financial literature have been dealing with patent, those 4 papers give you like a good 360 degrees. The first one is on the relation on, it's a recent paper on investment and patents. We've always this notion of a patent which is granted and not granted, which is not the case of today. Afterwards, you've got some paper that have been linking very cleverly patents with fundamentals. Now I'm talking much more to the people involved in fundamental analysis in equity stocks, and they are very interesting correlation in terms of using patents or proxy of patents in order to have a better approximation of R&D, especially because it's very difficult for some of you that have been doing a little bit of accountability for different countries. You see, it's very difficult to be very accurate in this R&D fundamentals exposure. You can find that in any third-party fundamental data providers. And in those papers, people have been referring to complementation of R&D plus patent, and it's giving a good first idea. The third paper, I wanted to show you that because natively, some countries are much more producing patents because lately it's been linked very much to technology. A new technology needs a patent in order to secure your potential line of products. So products can become a brand, and the brand will be to some extent an intangibles. And that's something that I saw very interesting in order to value, to have a very interesting metric for measuring a signal of intangibles. Patents have been something, generic patents have been already very interesting. So that's the landscape of what have been done so far.
Tony, it's been great to go through all of the research that you've done in terms of the background. And before we hand over and start moving into really the case study itself, could you give me a kind of explanation of how you would see Yewno sitting in this kind of patent universe and what's different about the Yewno data?
Well, first, since the full technology is super different for what has been done so far, it's again, as I said in the previous webinars, it's one generation jump. Using graph knowledge is super clever within patents because it opens a new road, bearing in mind that the previous road, which is the generic approach of patent activities, has not been tapped that much from financial quants, to be honest. I'm one of them, and I know a lot of them. It's very rare because they bear within a longer duration, which you need rather to be to some extent buy and hold in order to harvest those signals. So I would say that what Yewno is giving is this aptitude of extracting concept that could be cleverly a link across the whole universe of patents. So using concept approach, which is solely capable using graph knowledge, in order to get the real semantic behind it, is just like you're really reading what's behind it. It's giving you, so having this concept through graph knowledge within patents is giving you this like cross-sectional innovation approach. And the fact that you can refer to multiple a list of concepts, and the beauty with that in this graph knowledge, if you want to have a good coverage of a general concept, you can go deep, even deeper, and even deeper. So that's giving like the full tick in order to have a good coverage. And that's again something that the graph knowledge technology is providing beyond the other type of technology. This is really like a generation advance, according to me.
No, that's great, Tony. So look, thank you so much for setting the scene so comprehensively. What I'd like to do now is to hand over to you with pretty much a blank sheet of paper to take us through your case study.
So now, do you hear me well? Yeah, perfect.
Thank you.
Oh, okay. So the parameters of the exercise. So bearing in mind that now we want to test what's concept / patent. the first question, and we received a lot of questions after the first webinars, is how do you select the concept? That's one of the curses of this beautiful database from Yewno, is that they are, correct me if I'm wrong, I think that you've got millions of concepts. I'm not sure that you've got millions on patents, but that's very plausible. And the real question is, how can you select, and you can select a handful of concepts out of million? Well, I just telling my situation is, I asked myself, what are the concepts, what are the topics I'm very excited about? And what are the topics I'm very excited about that I do not have any type of signals or metrics? And to some extent, I'm a geek. I'm a quant, but being a quant is to embrace to some extent technology. And I do love to follow other science, because in finance, I'm not sure that we can say that finance is a science, but I'm very interested in other science. Among some of the latest findings, quantums, hard computing, fast computing through GPUs. Those are the things that I'm really working on, and I'm really interested in order to see what's next. So I just selected 20 concepts that have been the hottest technology for the last 5 years. Later on, you'll see the list of the concept. There is nothing fancy. It's going from GPUs to machine learning, artificial intelligence to quantum computing. The type of score that have been used, again, well, to be honest with you, it wasn't very, I did not spend a lot of time tweaking the data. The results that I have in this research exercise were kind of good early on. So I did not have to very select a lot of different concepts or play with the subtleties of the subscore. So I used the aggregate score, which is to some extent an average, a weighted average of the different contribution and over scores that Yewno is providing. So again, I use the data on a weekly basis. So with a 15 days window over the last 5 years. You can see the disclaimer pretty much everywhere in those things. And in order to have something beyond the just patent activities research, I constructed a universe of stocks that is already very active in patents. So basically, I just looked for the 300 most productive companies in terms of patent around the world for the last 3 to 5 years, I think. And after that, I just selected 250, which are to some extent very big company for most of them. And in this exercise, as I was saying, what we're going to do is to focus on the long term. Why? Because patents that are inherently have an exposure which you should wait in order to get to the crystallization. This is much more like a private equity to some extent, or a VC type of thing. A concept which is new, in order to be translated to a product, it could take time. It could be very interesting to be early in a trade. So getting back now to the universe that has been customized and created for this research exercise. So again, we selected the 250 most productive company in terms of patent filings in a global universe. So it's fair to say that this universe is already focused in developed countries. You'll see here the market cap weight breakdown in terms of countries. So basically, it's just like a breakdown in terms of countries for any market cap weighted indices. So I just plotted it. You see that it's mainly in US, Japan, and Germany and Switzerland. In terms now of sectors, which is the following slide, some of the patents in terms of have been are really typical to the sectors. So maybe if you can go to the next slide, you'll see the breakdowns in terms of industries. The technology of course, sectors in the industry group is the highest one in terms of the exposure within this dedicated custom universe. But as you can see, randomly taking the 250 most productive in terms of patent filing, I've been giving quite a well-balanced universe. I was expecting more, even more bias on the technology side, but you see that there is a lot of capital goods as well. There's obviously the pharmaceutical, which is a big theme for patent, but also other sectors. We also have some example of companies like banks of materials that have been exposed to this vector of 22 concepts, 22 patents that we selected. So now, bearing in mind that the study deliberately focused on a very active universe of patent in order to show that using concepts should even be better than just selecting stocks that are linked to patent or not. Because in some of the criticism that I could make regarding some previous existing literature regarding patent activities is that most of the time they've been saying or creating signals saying, you see, this is the group of stocks that is producing patent, this is the one, and this is the group of stocks which is not doing patent, and just comparing the two portfolio and stating that there is something in the patent universe of stocks, which is true, right? And here we want to go beyond that. We don't care about companies that are not producing patents. We want to see that within them, can we go beyond that? Can we have some kind of a step of advantage? So now, regarding the concepts and regarding the hot technology, you'll see here on the left side the concept, the 22 concept that I've selected. The column after that is their percentage in terms of instances. For instance, the most covered concept in terms of dates, in terms of exposure for stocks, is the augmented reality. So if you go through the list, you'll see that there is nothing like which is super specific. If you're interested a little bit in technology, those words should make sense. Some of them could be slightly more technical, like Guida, which is the GPU native language for NVIDIA card, because when you want to code in a fast manner, you have to do it. And on the right-hand side, the thing which is the pure extract from the database. So you see the reference data, the requested concept ID with the mnemonic for this concept ID, all the set of score going for the aggregate, similarity, centrality, contribution, and pure play. Bear in mind that the aggregate is a weighted sum for the other four factors. And on the right, you get, on the last column, you get some of the companies. You get the names of the companies. For instance, Sony, Baidu, GoPro, PayPal, very high and hot companies. So creating a universe of very hot companies, which is to some extent already outperforming the market, but trying within that to be even more picky and to find, using this cluster of innovation, using this average of score for these 22 concepts, I'm going to create a final score that will be the plain vanilla average for each date, for each month, for each stock, for all those 22 concepts using the aggregate. And that's our base case. So we start with that. And if you go now to the next slides, you'll see some of the results. So here on the left-hand side, I produced a chart that you always produce when you investigating to a signal, is to construct decile or quintile or quantile portfolio out of the exposure of the signal. I will explain myself. For instance, here you've got 5 portfolio called aggregate quintile 1 to 5. Aggregate entile 1 is the lowest, so the portfolio made of the stocks with the lowest exposure to this aggregate signal made of this equal weighted average of all the scores out of this 22 concepts. And so on, aggregate until 2 is the sequence quintile Q2, quintile 2 portfolio, and so on and so forth. What is really interesting is to see that the portfolio made of the highest score, average score for those concepts, have been visually outperforming massively the other one. So you see that there is to some extent a degree of monotonicity, which is nice. So those portfolios have been rebalanced every month, or in order to see the purest effect behind it. Each portfolio is equal weighted, and that's just plain vanilla long only. I did remove the cost in the next slides, where you can see, we're going to see afterwards the table. But now if we focus on the right-hand side of this current slide, we did another thing. I did another thing, which were in order to understand the pace, the natural pace that were necessary for constructing those portfolios, because rebalancing every month could be too much, bearing in mind that the exposure, the factor exposure of this aggregated concept through patterns is very stable. And the empirical analysis proved me right on this point. If you focus on the right-hand side, there is another chart, which is taking this very outperforming aggregate quintile portfolio, which is the equal weight of the stocks with the highest exposure. You see that this time in green, I put the MSCI World, which is in tier net USD. And on the right-hand side, there is the ETF-like. So I created the portfolio out of these stocks of the aggregated quintile 5. So I created a portfolio, but this time with only 2 rebalancing per year. So to mimic index rebalancing or ETF rebalancing. And you can see here that the comparison of the performance is kind of funny, is exactly the same. It's pretty much the same on a cumulative basis. So you can see that churning around too much does not get you anything, because the signal are already super outperforming. The universe is already super outperforming, and it's stable enough just to have something rebalance only 2 months. So now if we want to see some analytics in order to recap all the different portfolio that we've created on the next slides, you'll see a table which is summarizing some of the findings. So this is the typical boring table with volatility, net performance, and this time I removed transaction cost, and I assume also broker fees, but this is long only very liquid stock, so it doesn't have an impact to some extent. You see that here, the ETF portfolio, which is the second one from the right on the table, is the one who is showing very similar performance metrics, but this time there is an interesting metric, which is the turnover on a yearly basis. So you see that this type of portfolio, it's only 40% per year, which is literally not a lot for doing ETF, and really not a lot with you speaking about multi-factor long-only portfolio, because most of the time this is in the range of the 100 to 200% per year, and this is exactly what we are seeing in the aggregate until 5, which is the portfolio made up of the most exposed stocks. So long story short, you see that this seems to me that there is a nice monotonic pattern here. I've been very surprised to have good results. We've already, without tweaking the data that much, because I didn't have to check other concepts. The first 222 concepts were giving good results. And I was very pleased to see that those type of very low diffusion types of signals are the perfect playground for making long-term, long-only thematic type of portfolio. So maybe to conclude on a few words, I would say that getting back to really things which is important is that using graph knowledge concept based on patent is a true generation job. That's really, and it's a perfect playground for doing thematic things. So imagine that you have a theme and that you know 25 or 30 concepts out of the theme. You can already see the results, right, using this type of data through a very low diffusion type of signals.
Tony, that was fantastic. Thank you ever so much. What I'd like to do now is to invite anybody to send in questions in the Q&A channel. There's also a chat channel, but Q&A would be better for questions. So we've got our first question already. So Tony, question number 1, how did you select the 25 concepts?
Yeah, the concept actually, I've selected in 2 things. Those are the concepts I'm following a lot. I'm following those concepts using NLP for my day job and for research purposes. And I was really interested to see if I could find those concepts in patents, because ultimately patent data is like the genesis of something that is not happened yet. So it was partly from my experience and my area of interest, because I'm much more interested in finding ideas in hard science, and I'm passionate about things that unfortunately I'm not an expert in, like string theory and physics, and those type of concepts could be found in early patents, and that's just how I did it.
Thank you. I've got another question. So based on the data that you've tested, what are some of the technologies that you expect to come to market over the next few years?
Sorry, I was mute. And well, it's a very good question. Some of those technology are already there, Guida and artificial intelligence, but amongst the quantum things, I used to be a pessimistic. And after that, I spoke to a colleague of mine who is doing great research in quantum finance paper. And apparently, it's the quantum chemistry which seems to be the one more ready. But again, I'm not an expert, so I can be wrong. But I'm expecting this to be much more out there and tangible and real before and used before the rest of the quantum computing things. But again, I'm not an expert, so I could be wrong. I was pessimistic, and I talked a lot about people which are much more knowledgeable than myself in those things, and they share this enthusiasm because it's already there in a manuscript. If you're doing a PhD now in chemistry, you should have heard about quantum technology.
No, thanks for sharing your views. No, that's great. So I've got another couple of questions along the same lines. The first is, how are the scores of exposures computed? And a second but similar one is, how do you calculate the exposure of companies to the concepts?
That's a great question, and I would say that those questions are much more linked to you guys on the how do you create your graph knowledge, and what is the score compared to a company. I cannot claim the right of those beautiful data.
No problem. Hand that one back to me. So we do have 5 kind of exposure factor scores. So what we're going to do is I'll add those to the slide pack, and we'll recirculate them at the end when we send the slides around. So thank you to you guys for asking that. I've got another one here. It says, what is the proportion of startup versus private versus listed equity to issue patents on innovation technology? And what is your view on the potential of alpha embedded remaining in the listed versus private equity?
That's a super tricky question. But that's a very good question. So one answer, there is, on the universe that I'm tested, there's obviously not everything is listed, that's for sure. I do not do the math on Yewno's universe of unlisted versus listed, but I'm expecting more unlisted than listed. I hope that there is more startup, because ultimately, if you have a good idea, everybody could file a patent data. It could be individuals as well. It's not only companies. So if you just try to characterize a segment, which is technology, using those like 22 concepts, and you download everything that you know there, I'm pretty sure, irrespective of the companies, I'm pretty sure that I'm expecting more unlisted. But the subtlety of the question, which is also to the attraction of the alpha by private equity or VC venture, is a real question. If you take, for instance, the Snap, I'm not going to go political on that. I absolutely don't care about that, but that's a good example, right? There's been a lot of of analysis showing who has been winning on those like early trades that have been showing to ourselves for the last 10 years. Snap is one example. It does not fail that ultimately this is when the stock is listed that there is the most to make out of it. But again, this is thinking in terms of stocks. I'm much more thinking in terms of global portfolio, in terms of exposure, because when you're just like playing your bets around different companies, this is you're making more the odds in your favor, especially in this pattern thing where there is a high risk of bust.
Great, thanks, Tony. A couple more. One is actually for me. So the first one is on the data, which patent offices around the world are covered by Yewno? So I can confirm we cover WIPO and USPTO. Thanks for checking. Then we have another one. I'm going to have to refer this one to a future webinar, actually, but it's a great question. It says, what is the intuition behind the knowledge graph? Or do you just put in a neural network and let it decide for itself what is the most interesting part of the graph? So I'm going to say something, and then Tony, I'm going to ask you to
Sure. Yeah, please.
I think from our point of view, when you look at a knowledge graph versus a traditional database structure, the key thing is that not only is it dynamic, so it's constantly up to date, not only is it able to make and keep connections up to date, but it's also not just hunting for terms. It actually understands context and can identify the concept itself. So I think once you're in that environment and once you've read these huge amounts of unstructured data, once you've crunched them through your algorithms and created this enormous multidimensional knowledge graph, within the knowledge graph, the clusters will move, the concepts will move. And so it's not that's the whole power of the knowledge graph. And what's happening within that is not something that any of us on this call could do because the scale of the data is so enormous. So that's how I would answer the question. But I don't know, Tony, from your perspective, what would you say?
That's a super question, and that's a beautiful answer. My 2 cents on that is that there is an eternal debate, eternal fight between graph knowledge and whatever we can do with a neural network. To some extent, there is no reason to be fighting because one is taking the abstraction of the other one. You can use and you should use to some extent, and I'm sure you guys are using to some degree something which is close within your graph knowledge structure, which is close to a neural net, because the structure behind it is pretty much the same. What I would just say is that the ambition behind the graph knowledge is very different. So the ambition of the graph knowledge is the perfect playground for this dynamic type of cluster, which is very stable. The ambition is not the same. I'm sure that you can tweak neural nets in order to give you extremely good results, which might be comparable to graph knowledge. But my point is, using graph knowledge first, you won't have to. After that, this is other problems which are stepping in, which are scales problem, how to deal with immensity of mountains of data and which could not be represented to some extent with for human eyes. But I value both techniques in the same way, but using anything which is NLP, I would say that on this aspect, which is understanding the semantic and doing something which is ontologic, which is really like the neural net could have good results, but ontology speaking, semantically speaking, potentially it won't make sense. That's the problem. On this specific case, for other stuff, a neural net will be better. For image, for instance, it's no compete.
Brilliant.
That's my 2 cents.
We're pretty much out of time, but I'm going to do this final question. And just to anyone who we didn't get to, there are still open questions, I'm afraid. Please feel free to email them in and we will get back to you. So this one. So selecting the universe based on the number of patents, doesn't it add a bias to the model because concepts may be more common and more widespread in patents in the future and the alpha may be diluted?
Well, I would say that this is one of the strengths of this exercise, to focus on the very active universe of pattern, because you don't care actually of if you're interested in this thematic aspect. And for instance, some of the themes might be underrepresented in patterns, but I'm not sure, because the idea of creating concepts out of pattern data, there should be some degree of similarities. For instance, if you wanted to do an exercise of climate change, I'm pretty sure that you'll see wonderful patents and exposure on how to treat the engineering aspects on water and things like that. So I'm not sure that the universe is used like that. It's a strength to show something that you should go beyond the only patent activities. That's the point. And using different quintile portfolio, you'll see this increasing exposure. Quintile 1 of the scores is already outperforming the market by a lot, to some extent. So that's the idea. That's why I'd rather do it like that.
But Tony, I can't thank you enough for joining us again today for the third webinar in this series, and also just for doing so much background research on patents themselves and the universe of patents, in addition to your actual use case in the case study. And you know, I'm sure I speak on behalf of all of the attendees for thanking you for sharing your insights and the case study.
Cool. Thanks a lot.
But thank you, everybody, and we'll be circulating the slides shortly. So thank you to everyone for joining, and thanks again, Tony. It's been great having you with us.
You're welcome. It's been great. Thanks a lot.
Thank you, everybody. Bye-bye.